Hey guys, it's Adam Rose, Western Ohio Mortgage. I'm the Vice President Senior Loan Officer here in Sydney, Ohio, and this is another episode of the Mortgage Guy Podcast. And this is one where you're getting a little bit of a market update. So you'll see me, I'm wearing glasses. I usually don't wear glasses on my show. I have to read a few things, so just for the record, I'm getting old and I can't read anything. So wanted to talk about what's going on in the market real fast. So a couple weeks ago, it might not have been 2 weeks ago now, maybe a week, Fed comes out, raise rates another quarter point. So when does the madness stop? Well, I think the bleeding is going to stop soon. So not that the Fed hasn't been full of it before. They did say that this is probably the last time it's going to happen. We shall see. Only time will tell. But with that, sometimes the mortgage industry rates, they kind of react more favorably sometimes when we raise rates a little bit, just because we think we're going to have some negative impact or negative numbers in the jobs market. Maybe inflation is going to be a little bit more tamed. Unfortunately, it was a little bit of a mixed bag this last time. Rates did move up a little bit. We're not going to talk about specifics because I'm not going to do a big old disclosure along with it. But to read this from Freddie Mac's chief economist, so the combination of upbeat economic data, meaning our jobs numbers were actually favorable, data and the U.S. government credit rating downgrade. This is huge. The credit rating downgrade caused mortgage rates to rise this past week. Despite higher rates and lower purchase demand, home prices have still increased on average across the country due to very low unsold inventory. Very low unsold inventory. On average, the rates have changed in the mortgage industry by 0.1%. Example, if it was 6.9, it's now 7. So nothing huge, but nonetheless, we are still dealing with a little bit of a higher rate environment. So that's kind of what happened, with that downgrade mixed with economic indicators that show that we're not in a recession. It is negatively impacting our industry still. Outlook is still positive. Sounds weird, doesn't it? But it is positive moving forward. We do see, based off of a lot of the trends and what's going on in the market on the end of the year, next year, we're going to see some favorable outcomes to come here, because that target rate for the federal government is 3% on the inflation numbers, and it seems like they've hit that mark. That's not the target, I'm sorry. The target is 2%. We've hit 3%, hence why they did the other increase on the rate. So hopefully we are still trending downwards. This week, I think the new CPI comes out. Some more jobs numbers comes out. There's a few other things. There'll be more indicators on where inflation is. So we'll probably have another update for you guys next week. Little update again in the market. New home sales increasingly backed by FHA. So FHA took an additional 2% of the market. Now, I think it was how long ago was that? Maybe 4 months ago, 5 months ago, beginning of this year, when FHA changed their mortgage insurance premiums. We talked about how that might be a better deal for some people. It's finally showing its face. FHA has gained another 2 points in the market space, from 12.1% to 14% in the second quarter of this year. All right. So April to the end of June, 2-point increase in their market share, decreasing conventional by about 1% in a couple other little categories. The huge market share still is, even though it might not sound huge, 6.5% of new home sales are cash purchases. Cash purchases. So we experience in my market, I know we do a lot more in larger markets, the Dayton, Columbus, and Cincinnati areas, where we're having a lot of boomers actually not only just retiring, but downsizing, right? They're selling their homes, and their valuation, they have their homes paid off. The values are so huge. They're taking that cash and they're buying the next house in cash. So we are finding that is pretty common in our area, and it's making about 6.5% of the market. So between FHA and cash purchases, that is 20% of the total market recently. And the last thing I wanted to touch on before I let you go here is we have some new programs available. This is for those people sitting in their houses that don't really want to list, may want to access some cash. They don't want to cash out because they don't want to reset that 2.5% 30-year fixed rate that they currently have. We have some options for HELOCs as well as HELoans. That is a fixed second mortgage. And the nice thing about it is it's going to be amortized over a 20 or 25-year period of time. It keeps that payment really low. So instead of cashing out and getting 30 grand, 35 grand, 50 grand, whatever you're wanting to do, and resetting that current mortgage from a 2.5% to, whatever it might be today, 6.5 to 7.5, right? In that range, and resetting that payment. It might make sense for you guys to take a peek at that second mortgage and use it for home renovations. Use it for whatever you want, debt consolidation. You will go buy a new car in cash. I'm not going to suggest this loan for it, but you could do it if you wanted to. But if you are interested in that, give us a call. It's fully automated, right? I'm going to shoot you out a link. If you have all your documents that you can upload, you can get this approval in about an hour if you're a little tech savvy. If not, it might take a little bit of time, but not much. So people are getting their cash in 3 to 4 days. It's a very, very neat program. Again, fully automated. You can do it from the comfort of your own home. You can do it on your cell phone. Very neat program. Give me a holler, 937-497-9662. We can discuss that program and see if it's right for you, see if your equity position is in good position or a good place where you can do this. Out-of-pocket expense-wise, there isn't any, right? It's going to be deducted from your loan proceeds. Everything, again, like I said, is fully automated, so you're going to have an AVM, which is an automated valuation model, no full appraisal. If you disagree with the value on it, we can obtain one if you wish. All the title work is going to be automated as well through public records, so it's a very, very neat program, very cutting edge, and very, very quick for someone who wants to access some cash using their home's equity but doesn't want to replace that primary mortgage. So let's get everybody into a good financial position. This is a new program for that. And again, give me a holler with any questions. That's it for me this week, guys. Remember, subscribe on YouTube. Check us out on Apple Podcasts, and check us out on Spotify, and we will see you guys next week.